Hey, it's Mack with PriceActionTradingSystem.com, and it is Monday. It's October the 6th. This will be our chart lesson for today, and it turned out to be a really good trading day. What looked like was going to be a typical range kind of day, we just continued lower off of this trend line right here. We had a shorter term one here with a break, a new low, and a little correction, but this one continued to hold. We did have a close outside of it the way I have it drawn here. Um, Early, but we just continue to go lower, and the trend line continued to hold. And you do have a close, but maybe I have a little bit too steep. Maybe it's not quite that steep. I played with it a little bit. I still like it the way I've got it drawn here, so um, I just left it the way I had it drawn. So sometimes, I mean, you can't argue with the price action. And somebody actually made a comment today. Um, that they didn't, they expected prices to bounce and stay range. And I'll be honest with you, I did too. I really thought this would be a range kind of day. And so I was a little bit, and it really is going to turn out to be a range kind of day because we're going to end up closing unchanged. If we close right in here, I mean, we've still got 30 minutes left in the trading day. But if we close anywhere around within a point or two of 1961, it's basically an unchanged day. And in the end, there's probably a midpoint right across here and an upper part of the range and a lower part of the range. And these probably just turned out to be, um, you know, measured moves within the bigger range. Let's just put this down here and see what it looks like. You can see that right there, that's pretty much halfway. Let's just measure it and see how close. Betting it's real close, if not exact. All right, there's your upper half, and there's your lower half, and yeah, they're pretty much, this one may be a little bit lower here. Well, there it is. That's pretty much within a tick or so right there. And so I think that's looks legit to me. So in the end, it's probably just a larger two-tiered channel than what we originally had drawn. So it still doesn't change the fact. But when you get a trend, or I'm sorry, when you get a range, um, I might have said channel a minute ago, but when you get a range, this is a two-tiered range. I'm sorry. There is a two-tiered channel too, but don't get, sometimes I say one thing and mean another when I'm trying to think of several things at once. That's one of my faults. But anyway, in the end, it looks like it's probably going to be a range day, and we're going to probably close to unchanged within a point or two, probably either side. Of course, this thing could keep rallying upwards until the close, and we might end up closing up. I don't know. But in the end, this is just a two-tiered range that was bigger than what we saw earlier. And once you started looking for a target down here, there's a couple of different ways to get to it. One of them would be I would have measured this upper. Notice how this overnight price action pretty much contained the range, and that's generally what you look for. And so the first thing I would do when we started lower was I would measure that range right there, and I would drag it down and look for prices to go about that same distance. But you probably would have also looked at this like this is one leg down, and then your correction, and then a second leg, and it gets you pretty close again. It went a little further than that, but it still gets you really close. So that's usually how we do our targets, which that shouldn't be a surprise to anybody that follows our stuff. We can show you how we do that over and over and over. So it's not that difficult. Obviously, it takes experience and watching the price action and so forth, but it can be done. It's not that difficult. It really is not. But in the end, I think we're probably got a range day, but back to where I was originally started here before I mixed up my words. When the trading range is this large, say from 51 to 71, that's 20 points. That's a big range, but it's price action works on every level, and so you can have ranges that are as tight as a point or so, and you can have them as big as multiple points, count pretty much like what we're seeing right now. But when they're bigger ranges like today, you can get nice trend channels within, and that's what we have here. We have a nice trend channel. So um, you got to follow the trend channel. Now if we actually had a break of this channel, in my opinion, here and a couple legs down to a new low. But this is so close that it could be that this was the first break. So we may end up going lower before the close is over because we do not. If this is not a break right here, we don't have a retest yet. Doesn't mean we're going to get a retest, but that's generally what the bias and the rules tell us is going to happen. Is we're going to get a retest with a new low. Um, Again, in the end, I think this is more of a range type day. So it still doesn't mean that we can't test this low again before it's over or test the high again. This is what you expect in a range. You're going to get resistance off the middle, the kind of the midpoint right there, and the midpoint really is almost the same thing as this was the open this morning. Remember, the larger lines are today's high open, high, low, and close, and the smaller lines are the previous day's open, high, low, and close. And notice we opened pretty much where we closed. The open and close for the previous day was much further down here. We never got anywhere near that. And the high from the previous day was right here. So just remember what those lines are. I've started putting them on there and keeping them on there because it's amazing how often they come back into play. And I'm so used to looking at this stuff every day that a lot of times I forget to speak about it or mention it, and so I'm trying to keep it on the chart. I know it makes it a little more messy, but I think it's important, and so I try to keep it on there now. My throat is a little scratchy. I went to the ball game this weekend and enjoyed the festivities around town here from the big visit by Alabama this weekend. So you'll have to excuse my throat a little bit. If you're not a football fan, I apologize, but I'm a huge college football fan. I know a lot of you are because you have emailed me about it. And for those of you who don't know, I'm an Ole Miss fan, and so big weekend around here with Alabama coming to town and our win over Alabama. But I'll throw out kudos to our ball team and anybody else that's a fan of college football. You'll get that. So if you're not, probably just I'm probably wasting breath. You probably don't want to hear about it, so I won't say much more about it. But just one of my enjoyments in life, and it was a big weekend around here. But my throat is a little scratchy and a little sore from the cool weather and the screaming and hollering at the ball game, and just the overall long hours from the weekend because it literally was a madhouse around here. And just to give you an example, and then I'm going to get back to the chart lesson, is that this town is normally about 20,000 with about 18,000 students. And over the weekend here, we probably had 150,000 additional people in town. So you can get an idea of what that's probably like for a small town, a small college town around here. It was literally a madhouse. So but that's enough about that. Let's get to the chart lesson. Again, it overall looks like it's going to be a range day. We had a nice channel working down. This gave you plenty of opportunity. There were some really good moves here with some, and if you caught any runners, you really probably could have made some money. But let's start with the trades, work through them. I'm going to make it a little bigger so it's not so hard to see. But you have to kind of scrunch it up to get it all on one chart. And that's another good point too. Somebody else brought up lately is we've had some really good movement lately, and we got weeks and weeks that looked like this, even though it kept going higher and higher and higher. You just did not get the moves like we're getting now, and but that's good. You want the volatility because it gives you an opportunity to just sit and be tight and wait on the good trades, and then when you find them, they really move well. But people always say, well, when the volatility gets low, why don't you just trade something different? But I'll be honest with you, the ES, there's no slippage in this market, and so that's one thing I really like about it. But the other thing is it's so predictable. So even though the volatility is not as high, what's it's just really predictable. Even when you get in a range like this, generally it's going to turn down off the top and bounce up off the lows. And that gets really, really predictable. And you can see here where every time we touch the high, every time we got down to the lows, it bounces. And you can trade that. I didn't mark them once we got down into here. This one was, I'm actually meant to mark that one there. Should be green, I believe, though, because it's a little bit aggressive. But if you're, if you saw the range and you understand how price action works, especially in the ES, you know you're going to get a nice bounce there. And we got it. So um, the other thing was you didn't really have this bigger trend channel here yet. You might have drawn it off those first few closes there, and but when we were bouncing here and moving down, it was obvious this one. So I wasn't too sure about this one at the time. Um, Looking back on it, it might have even been up here. Either way, you still get the close there. I'm thinking it's right down through there, and we had the break here and a couple of moves. It just happened to be some real strong moves down to the new lows. So, but let's talk about the trades. When I came in, we had this spike up, and there's actually a little shorter term channel in here too. But I was thinking, hey, we may end up either having another channel working up, and maybe there's a midpoint and another side to this. Maybe the midpoint's right in there, maybe a little higher. But in the end, I mean, it was fairly obvious that this was a good trend line working up here. You can see prices when it bounced here, that was a good sign. And so, and you were looking for a new high, even if you were trading this one. There's your break. You got your two-legged correction, and again, just like you're looking, just like it worked in the other way, draw your first, and then look for a possible measured move. And when you don't get that measured move like this, that's a good sign. That generally means, once it starts trending down, that you're going to go a lot further in the other direction when you can't reach a target like that. Most of the time, you'll see those targets reached within a point or so. And it's amazing how often they're reached to the exact tick. But they almost always will get you really close in the ballpark. But I looked at this as a spiking channel early. You can see that little channel working up through there. Um, but in the end, it looked like it was a spiking channel that got overshot. And then we had the double top and a couple of retests, and then it was off to the races down. So, um, but the first trade I saw was right in here around the 7 o'clock hour. We had two legs down. We had a first entry long right here. I didn't like taking that first entry because that really set up the trend line. But when we came back the third time and went lower and then went up, I liked going long there. It's a second entry long, counting off this side. You're looking for a retest anyway. Quick, easy move. You didn't get any runners on that one, but again, you get another little two-legged pullback. There was actually a second entry long right there. If you took it, that's okay. It would have worked. You would have had to ride this out, but I liked when this one turned down and you got the little double bottom there. Really, it's two more tests of this level right here, and again, another bounce right off the trend line. And look at that nice bar. I didn't like this entry because this was a big doji, and this was another kind of inside bar that didn't close on its high, didn't close on its low. It has a little bullish tint, so that was the reason I didn't like going long on that one. If it looked better on your chart and you took it, because it did really bounce off the trend excuse me. I'm sorry. I get to talking and my throat starts itching again. But again, I like the entry here. Now you got a failed second entry short. Really, you had a failed second entry short right here. But when you get that next little push down, especially when you're looking for a new high, I like that one. And off it went. Another easy. And this one didn't come back and get the runners until you already had a new high. And so I would have looked to exit this somewhere right up here because you did have this channel in the break and a new high, so you could get the sell-off. Um, and it comes back. You get a first entry here, and you get a second entry right here. This one was really, really tempting, but it's too close to these highs, and you hadn't been able to get above that yet. So I just, I think you got to wait for a better entry, and it is and you see, when it first took off, I'm thinking, well, maybe I should have taken it, but then in the end, following the rules always comes back to justify itself, and every now and then the rules, it'll work enough, that it'll make you doubt the rules, but then if you follow the rules most of the time, you're going to be right. And so what if it does go without you? You just have to watch it go without you, because most of the time it won't work. So you'll watch it go without you this time, and then it comes back and goes higher again, and you enter, and guess what? It turns straight down and traps you. And you're like, shoot, why did I do that? I knew better. But that's what happens to you. This is, they want to trick you. The whole idea is to trick you into entering the wrong places at the wrong times, so it makes it easier for prices to move in the other directions. And so you can't go long right here. You can, but it's really, really risky. And, I don't think it's worth risking. There's not enough room to get out. You haven't closed above that line either time, and this is a lower high than this one. And so it's real risky going here, and you end up with a double top, and then it tries to go higher again and turns down. It was tempting to go short right there, but you got too many overlapping bars. I think it was better to wait on the second entry, which comes here. And again, it's just not a very good entry. There's still a lot of overlap there. You kind of got a little double top across here. I'm sorry, a double bottom across here. If you went short right there on that trap, because you can count this double top either way as a new high here and a new high here, but I generally like, when you got a lot of overlap and a little congestion, just count this as your new high and wait on this one. But you can do it both ways. And so if you took that one, you went short right there, it worked. You had to probably ride this little pull back out. But when it turned higher and then went lower again, I liked going short here. You could have used a stop and it still worked, but I liked, when it ticked back, just use a limit order, right there at the bottom, or maybe even a tick back in, and it just drops on down. Then it pulls back, and it gives you like a little breakout pull back short, and it really tried to go up again. Notice it went up, it comes back, tries to go higher again, and then turns down. So this is like a second entry short right here when it broke down again. It actually tried to go up again when it went lower right there. You really could have gone short below that bar, but it was a second entry short when it went up and went back down. It's a little bit more hard. It's a little bit more complicated to see. It's a second entry on a little smaller level, but it's there all the same, and it's like a breakout pullback short. And this was the first break of that channel, so you're looking for a new low. And if you use the limit order, you got enough room to get out here before you reach the bottom. It didn't matter. It went on down anyway. And then it bounces right here where you would expect, and it goes a little bit lower. I don't think it's worth risking entering in here. There's not a good setup at all. And then it bounces. And like I said, an aggressive trader is going to want to take that bounce there, because this is a range. There's no doubt this is a range right across here. And this has been the support area right here. And this has been the resistance area. And generally, even if you're going to go lower, it's going to bounce. It's very rare that it just shoots right through, because that's just the way the ES operates. It's the way price action operates. And so just wait on the bounce if you want to go short. And generally, you can fade the breakout or take a trade in the opposite direction. So if it broke out this way, we want to go long. It's a little more aggressive. You're better off to wait on a second entry, which you don't really get a second entry long until way up here, and it's too late then. So you get a pullback first entry, pullback second entry, and you get that little double top right there. This is the support resistance line. It breaks one tick higher, turns down. When it broke lower here, I like just using a stop right there, but you might use a limit order and try to get a little better entry. And I think you would have gotten filled. I know you would have gotten filled right there on the break lower, and maybe even one tick back in. And this one turns out to be the trade. of the day so far. Look at it go, and it just keeps going and going and going and going, and it did that pretty quickly. So that was a very nice trade. And then, once you get down here, you're taking a big chance going short anywhere in here, and just wait on the bounce. There's your first entry short. There's actually a first entry right here, but this is all still part of the channel. And there's the first break. It pulls back, and you get a break lower there. So that's like your first entry counting off the high. It pulls back again, and then it's like a repeat pattern of the last one I showed you up here. And so I like going short right there. You probably want to consider a limit order there because it's not a beautiful setup bar, but it's like a second entry short counting off the high after the little channel break, and notice the trend line still holding. So that's what I really liked about it. And nice move down, and then you get another little two leg. This is how you trade a breakout. You don't want to go short right here. You wait on the breakout to fail, and then you wait on a setup to go short. That's just a two-legged correction. So a second entry short right there. Again, I think you're better off to wait and see if you don't get a better entry than this one, although you could have gone right there. What I liked was letting it break lower and then dropping a limit order in there and looking for a new low right here. I didn't think it was going to go all the way. I just thought it would probably make a new low. But you see, once again, there's another huge move down right there. And that's why you can't try to pick and choose your runners. But guess what? Most of your runners, where they will appear at, they will be off the key entry points. And I hadn't talked about that in a while, but the key entry points will always be the strong support and resistance, which are the trend lines, the highs and lows of the resistance areas, support and resistance areas that are horizontal, like this range. But your best moves will almost always come off these trend lines. And notice, every time we came back, that's where you got your good move at. Right there, and then right there. And so you're waiting on prices to come back to here and not trying to enter. See, that looks like a very good setup right there. But guess what? It goes and makes one tick lower than that little double bottom across there and reverses. And then you get a second entry short right around the trend line, and that's where the big move comes from. So then you got to wait on it to bounce again, and it bounces up. Look at that new low, pull back, first entry, pull back. There's a second entry short right there. I liked it. It pulls back, it touches the line again, and gives you a second entry short right here. And at this point, I'm thinking, well, I guess the range is still in play. And you got your break of this channel, a new high, second entry short. Now you got another break higher that fails and turns down. So you got that failed second entry long that trapped everybody looking for bottoms. Go short there, and it just keeps. And then you get another little chance. This was kind of congested looking, so it breaks out, it pulls back, it tests it. That's too big of a bar right there, too close to the low, but when it breaks higher again, just it broke out the top. Just have your stop right there. Another quick, easy move. And then you finally get the bounce, and you traded higher and kind of got back in another range again. And we got still about 10 minutes, a little over 10 minutes. But this one, go back and talk about this one. Generally, you want to wait on your second entry short, which is there, but it's so close to those lows right there. There's a lot of reasons to like it, but at the same time, there's some reasons to be a little bit concerned about it. And you can tell that because most people waited until it was a little clear it was going lower before they finally got short. And so they were trying to reverse it already here. And it was able to make one more low before they were able to reverse it. So once you get your break and a couple legs down to a new low, you got to really be careful and choosy about your setups and make sure you're reading it properly, because this is what happens. You get short right here and you get trapped. And but notice that's two inside bars. There's stems on both sides. You don't want to take that first entry short right there. You could consider the second entry because that's the double bottom, but we were back outside. Everything's above. That was pretty bullish above the EMA. So I would wait on a second entry counting off the highs. And you don't get that. Instead, you get the bounce, and I liked going long there because now you got the failed second entry short. You're looking for a reversal anyway, and off it goes. And then you get a second entry long here. It got just enough um, to get your long, and then it turns down again. Um, you were looking for a new high. It looks like a nice two-legged pull back to the EMA. It looks like the first break of that channel to me. But if you draw your trend line, you can see, and this is, I didn't have this on here. If you draw that, it makes this a little more suspect, and so it would have probably kept you waiting. I didn't draw mine on that one for whatever reason, because I was still looking for the new high, and it worked, but it was really, really close. Um, and then when you get the little, notice all those matching, you need a line across there to really see it. That's why I always draw my lines. Look at all that. You can tell that's kind of a support resistance area, and look at all those support across there, and it breaks lower, so it's like a little trading range. You figure prices are going to come back up and test the highs, and this thing just keeps going. That turned out to be a really good trade to the upside, and that was the last one I marked for the day. There's another long trap right there, and obviously it's not a very good long setup, so like that one to the downside right there. Go ahead and mark it. And that turned out to be a really nice move down as well. And you get the same thing again. Now you're kind of stuck in another range here, a smaller range. And you can see that right there. So that's pretty much it for today. Not much else we can talk about there. Pretty good trading day. If you get thrown off a little bit, you know, the thing that you got to watch, and I'm going to do a lesson on this. The thing you got to do and be careful about is if you do get trapped on one of these, don't hang around. Just exit and then look to come back on the next trade and get it back. You can have some losers and still recover. You know. But the worst thing you can do is hang on to trades and just let them keep going and letting one trade wipe out, letting one loser wipe out 2, 3, 4, 5, or maybe a whole week or a whole month or a whole year's of profit. And that makes, you may think, scratch your head and say, why would anybody do that? But trust me, it happens all the time. And that's what happens to most people. It's happened to me. That's the struggle I have still even today as a trader, is not admitting when I get it right so much that when I'm wrong, I don't want to admit I'm wrong. And sometimes I'm just flat wrong. You read it wrong. You get fooled. You get trapped. And the best thing to do is just exit. Just, you know, think about it. If you got trapped long here and you exit here, you lost 50 per contract, you lost $50 to $75 or something. But if you waited till down here, you might have lost 100, 150, 200, and then it goes right back where you thought it was going to go anyway. And so just take the little hit and make it back on the next trade. It's not that difficult to make back a small hit. And you know, don't move your stops around and try to guess, you know, what's happening. But as soon as this broke below, when this broke higher, this was a second entry long right here. And as soon as it turned down and it broke below that bar, that's when it became a failure. And that's when everybody's got to exit and look at them exit. And that's what drives it down like that. And then once they're all through exiting, there's no more selling pressure, and it goes right back to right where it was at again. And it gives all those longs a chance to get out by a tick. Exactly one tick, and then it's headed lower again. And that's typical. I mean, that's amazing how often. This thing is very efficient, very thorough. There's not another market that's as efficient and thorough as the ES. It's you know, it's very predictable. It's like clockwork. And if you trade it long enough, you get to knowing it. So, but anyway, I'm going to wrap it up for the day. Hope you had a good trading day. We'll be back to do it again tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.